Hey guys, Silverbacked Gorilla here with another video. Just wanted to just go through. I've been doing these this analysis and strategy. Following the Heiken Ashi candles on the daily. I've just recently changed to 2-day, and then something happened with XRP. It was one of the only 3 assets I was holding. And then we got this massive spike down. Let me just show you. I just quickly want to run through this because it's on my mind. So, as far as trading this, we've got a good position down here, and then we've got a red candle up here. So, I just want to backtrack and just go, okay, well, what did this give us? All right, and look at exactly where we got in and out. So we got to 34% in 10 days, and then we jumped out. And then it went sort of like, then we jumped back in here, and then from there we got from there to sort of here, 3% in 6 days. So was that 0.5% a day or something? And then we jumped out, and then we jumped back in, and then we got from here to here. 3% in another 4 days, but we did jump out a little bit there just to protect ourselves, and then we got this massive spike down. Now I'm only bringing this up because I want to have some automation in here. I'm using these basically just these as alarms. Eventually I'll be using these as stop losses. Now if I was creating a stop loss, I would have gotten in sort of here. I would have just had the stop loss just below these wicks here. That would have been a nice, that's a perfect buy green candle. So there's no reason for me to bring my stop up closer. And then we would have got smashed down, but we would have done it while we had our pants down here. So we would have lost all that momentum from here all the way up to there, which is, let's expand that and see if I can get, here we go. So 9% in 3 days, washed out, if I had made this stop loss automatic. So with that in mind, so I'm just thinking, if the path of this is to basically go up and down, and start getting more volatile, and then end up going up eventually, what would be the best principle to follow? And that would be to maybe, if we could skip these in and out, and just stayed in it and continued up, and then only drop out completely if below these sort of levels, if it actually became something where it's actually going to be reversing and coming down. So yes, it would be sort of ignoring all this and just basically getting into a flow where we're following a bit more of the major moves. Something more like this, and it would be a lot less work, and I'd actually be able to, even though I'm not using monthly candles, I'm in daily candles. It actually opens up a few more markets as well. So I could probably increase the amount of assets I follow, trade less often, and just follow the bigger moves, and then I'll drill down and find the actual assets that are performing the most. And I won't get stopped out and faked out. I don't know. There's a part of me that thinks that there is going to be a lot more fake outs coming, because there's more institutional investors in the market, and they're looking at longs and shorts in the leverage markets, and they're just trying to do these sort of fake out moves. If I then layer in some automation where we're getting stopped out every time this happens in smaller time frames, jumping in and out at this stage. It's going to allow us to pay more slippage and more gas, and I'm not really happy with the level we're at with the decentralized exchanges just yet. So what I want to do is minimize trades. What I'm going to be doing is looking at this. I'll just literally look at this in a sense of how could I have traded this in such a way where I can get in and just get out, stay in. And not get knocked out by this scam wick, basically. So what I'll do is just as I go up through the time frames here, I'm just going to look at, yeah, straight up. I got out once in this whole period. If I go back to there, that had me going in, out, and in. So if just going to 2 days actually just reduces the amount I get in and out. But then look at all this. I'm sort of out and in and out and in and out and in and out and in and out. That'll piss me off if I'm trying to follow 50 assets. 3 day, I'm still going out and in. 4 day, that's still choppy, but that is literally sideways market. There's no way of not going out and in a sideways market. But when it's trending like this, like for example, if you notice here, from 1 day where I was going in, out, in, out, in, out, to 2 day, it's like in, out, and then 3 day, it's like in, out, and then 4 day, it's just in. I like the sound of 4 day. So what I can do is because these Heiken Ashi candles are designed to be used in a monthly time frame or longer time frames, and this is why it is so powerful. I want to make sure that I'm not working in too short a time frame, and also there's a really nice thing that happens with the strategy that I use. Essentially, when I enter, like say for example here, yes, we're going to get in a few days later, but we'll get in there, and then essentially I'll put the stop loss just below my entry. And then we'll just follow it up, and I won't actually move my stop loss up as we are making profits unless I see a wick. Now we just saw one here, so I can now move my stop loss up to there, and then I can lock in those profits. So this is the SocketWrench strategy. So I'm ratcheting up my profits and then locking them in, but not bringing my stop loss up too close, too early. And I'm certainly not going to allow a bit of volatility to get me knocked out. I want to actually eventually. My intention was to always knock out the, getting stopped out with volatility if it's going to continue up. Now, if this continues up and turns over, I've still got my stop loss there. And then as we migrate into using sort of DEXs, we can do that a lot better. So what I'm going to do is I'm going to ignore my stop loss that got triggered, and I'm going to stay in XRP. And then I'm going to go through all the assets that I usually go through today, and I'm going to do it with the lens that I'm working in a 4-day chart because I want to do less work, and I want to actually, but I will be adding more assets that I'll be covering as I go through, following this same principle. So anyway, so that's a new change for today. So EGLD, we're already out. So this is my sold column anyway. So I'm checking this the second last candle to make sure that it's still red, and it should be in the sold column. I was looking for anything that might have turned green on the second last candle. Otherwise, I'm just going to leave it in the sold column. It can stay there. You can pause the video so I can get through this quickly. This one's actually, what is it? Bitcoin. There you go. So Bitcoin is it's smashed down. Look at that. The second last candle is here. We're within 1 4-day period that has 2 days remaining. It's still in the red, but it could flip back around. And look at how much it's travelled from there to there. That's actually a long way. It did flash right down, and it's come back up 4%. But yeah, look, I mean, as far as a trend, the wick is a lot lower down there. Second last candle is still this one, but what I would do is if I was still in this, we would have come in here. Here you go. This is testing out my new principle. So if I go back in time and I would have said, well, I would have got in there, we would still be in there. The stop loss would have been down here. This price action would have happened. We would not have got stopped out. And now that it's red, I can bring my stop loss up to there. But once the candle finishes its motion, so that is still a current one, and it's still going to go for another 2 days. So I will leave my stop loss down there until that prints, and then I'll bring this up to match the range of volatility to then perhaps continue on and not get knocked out. So here you go. So that's basically where I am. So BTC, we're actually gonna go in and buy. All right, so I'm gonna do this as I go. So let me put this in the buy column, and I'm gonna do that today. I'm gonna buy it today. Oh, come on. So we're gonna buy that. Okay. So anything else? And I'm looking for this second last candle to be a green. Otherwise, it stays in the red column, sold column. So hang on, go back. Doge. Okay, go back in time. We'll pretend like we got in here. Come on. If we got in there, we would have got in with our stop loss just below here, our entry, and then we would have brought it up to the level of that wick, and we would have been stopped out. So actually, Doge will remain as though we are stopped out until we get a nice green candle. You can see how this is working well already. Okay, here we go. Go back in time. Pretend we got in here on the first green candle. We would have put our stop loss here, and then as we went up, we would have got this volatility, and we would have brought it up to there, and we would have got stopped out. So that is actually still a sold asset. So it will remain sold until we get some green candles. Uni. You can see how this logic follows. This is green, so okay, again, we'll go back in time and we'll pretend like we got in when it first turned green. We got our stop loss, and by the rules that I've set for myself, we would have brought it up to here. We've got this green candle, we would have brought it down to there. Down to there. And then the next one would have been that wick there. We would have brought our stop loss up to there, locking in all the profits from there to there. We would have, again, put our stop loss under this wick. Again, to anyone that's just joining the channel, these lower wicks mean there is price indecision. So that's why we're bringing our stop closer. Otherwise, we don't. So we let the price action run. This one would have brought us up to here. And I would have set it right there, and we would have been stopped out in the last 2 days. So again, that is correctly in the sold column. We are out of that asset. TRX, EOS, Link. So it's not a big change to what we've been doing. Here's a buy. Okay, again, we'll go back in. Pretend we're going back in time. We would have bought in here. And then our stop loss would have been put in just below it, and then there is no wicks over here until we get to this current one. This is again, this is a 4-day time frame. We have to wait another 2 days for this candle to finish out and see where it prints. We probably will. We will, bring the stop up to just below that, but we probably would be still in this one. So true to fashion, I'm going to grab that Sol asset and put it in. I'm going to buy back into it until I see this candle play out. Link. This one has got a green candle. Again, if I was to let's get rid of some of these bloody candles all over the place. If I was buying into this, I would have bought in down on this candle here. I would have put the stop losses below it, below that wick. And then as this went through, I would have brought that up to here, and then we would have been stopped out. So this is an asset we are stopped out of. What was the last one I did, by the way? Yeah, see, I wouldn't have actually brought that stop loss up, so that wouldn't have stopped us out. So that's why I've bought back into it. Yeah, sort of check my logic there. Stopped out of that one. Big red, don't touch it. Big red, don't touch it. This has got a green candle. Let's have a look and see how this plays out. So we would have got it. We would have got in down here, and then we would have put our stop loss in down the bottom below our entry.